Hey, what's going on, guys? It's DNL back with another video. In this video, I'm going to break down futures trading in a way that actually makes sense without the hype or random indicators and, of course, no guessing. Um, so if you're new to futures or have been trading for a while, but you still feel like everything is chaotic, this video is going to give you a nice, clear framework to follow. I'll explain exactly what futures are, how I personally structure my charts, how prop firms work, and why I use TradingView. And how I use the DNL trading indicator as part of my daily process. This is not a get-rich-quick video. This is how I actually trade every day. This brings me to the first topic. What is futures trading? At the most basic level, futures trading is trading contracts, not companies. When you trade futures, you're speculating on whether price is going to go up or down. On an index, usually like the NASDAQ or the S&P 500. So you're not really buying shares, and you're not holding long-term positions. You're just trading the price movement. And a reason a lot of traders like futures is because they're extremely liquid, right? So this means you can trade both directions easily, and you don't need a massive account balance to get started, especially if you're using micro contracts. Compared to stocks or crypto, futures are definitely more structured. They're defined trading sessions, consistent volume, and cleaner price action if you approach it the right way. The two most commonly traded futures markets are obviously the NASDAQ and the S&P 500. The NASDAQ goes by ticker sign NQ, or for micros, MNQ. It moves faster and has more volatility. And MNQ obviously is what I would recommend for you beginners out there. The S&P, or classified as ES, is a little slower and smoother. Its micro version is MES. If you're new, micros on the move. Same setups, same levels, same strategy. You're just risking less, right? So that brings me kind of into prop firms, right? And so now a lot of people don't trade futures with their own capital, and that's where the prop firms come in, right? So prop firms allow you to trade a funded account after passing an evaluation instead of risking your own money. You're trading the firm's capital, and you're keeping a percentage of the profits, right? Which totally lowers the barrier to entry, but it also adds rules, right? Things like drawdowns, daily loss limits, and risk management requirements. And the biggest mistake people make with prop firms is treating them like a casino, right? It's really easy, you get a $50,000 account for, $50 and just, oh, I'm gonna buy. It's gambling. Let's be honest here. So if you don't have structure, you'll blow your evaluation super fast. And yeah, the biggest thing is prop firms reward your consistency. If you can manage risk and follow rules, they are a great tool, if not the best tool, in terms of trading futures. So now let's bring me into the platform setup and API access, right? So obviously, hopefully you're watching this and you've already enabled your API settings inside of Trade8, and then you just go ahead and enable access to TradingView, right? That lets you bring up this beautiful chart that you're seeing now. That's how you get access to this and how you actually can trade on it, right? And that's the biggest advantage, right? If you're charting on something and you can execute on it, man, like, it takes a lot of the guesswork out of the equation. TradingView gives me clean charts and execution platforms, right? So if I go here, right, I might have to open a paper trading account here for you guys. We'll do this here, right? So if we go here, this will be the same if it were a live account, obviously. Right, we can move our stop loss $520 to make $2,500 there, and we just click sell, and there's our sell limit. So this is obviously a paper account. That trade isn't real, but yeah, it's super easy to do it, right? You just, okay, I want to sell limit at 25,444, and boom, just like that, I've got my trade, right? And this is great because it tells you how much you're risking, and it tells you how much you would make if your trade were to hit. You can also change the contract size here, right? And yeah. So it's awesome. I really like TradingView. I'd recommend it. Super beginner friendly as well. And so now that brings me into getting this set up, getting this chart to look the way mine does. And for that, right, we will create a new layout. We'll call this one video, for the video. It's going to open a new tab, sick, close that one. So awesome, right? So now we're opening our new chart, and this is what yours should look like for the most part. I've changed some settings down in here, right, in the canvas settings, right, to make it not so, white. Right, so if you want to copy these settings here, pause the video here, you can go through these. But yeah, that's what I do for my settings initially. Right, so we have the bullish candles as black and the bearish candles as gray. So one of the big things I stress with my chart is simplicity, right? Most beginners tend to overload their charts with indicators, hoping one of them will predict the market. And that's not at all how this works. Indicators provide context, not signals. My chart focuses on levels, time of day, and liquidity. Everything I use there is to help me understand where price might react, not where it's guaranteed to go. But anyway, so let's get into the indicators that I use here. So if I hit the indicators, right, we're able to see I've got three favorite ones. We're going to go ahead and add all three of these. Nice. So it also added a volume one for me. I also trade with the volume one on. I really like that personally. I like the volume there, just so you can see where volume spikes through it today, right? You can see we have a big spike here at 9:30, and we have a big spike here at 3:55. So nice. Now that we have all these here, I'm also going to go ahead and add the DNL trading indicator. And yeah, this is what I am rocking with at the moment for my TradingView charts. Pro tip, actually, I'm going to go inside this ICT kill zones one. I'm going to go down here all the way to the bottom. I'm going to hit this true day open box under opening price. I'm going to click that and accept it. And then I'm also going to go up here to where it says show kill zone boxes. I'm going to unselect that. And yeah, now everything should be perfect, right? So the ICT's kill zones indicator, what that one is doing, right, is that's just making our lives really easy. It's marking out the PM high, PM low, lunch high, lunch low, AM high, AM low, London high, London low, Asia high, and Asia low, right, along with giving us our days down here, right, so we can just easily see what day it is, right, so that's the ICT kill zones one. I'll talk a little bit about this first presented fair value gap. This basically is just taking the first fair value gap that is presented throughout the session, right? So this is New York PM's first fair value gap. And you can see why I like this, right? It gets respected a lot, right? Like 1, 2, 3, 500, right? It gets respected a lot. And you can see price moves out of it. So that's why I like that. I don't use it a whole lot. It only shows up on the minute, so that's why I like it when I trade on the 5 minute. If I ever zoom in time frame, I can get a secondary level if I'm looking to get into a trade. Equal highs and equal lows. What that gives me, right, is it'll tell me, okay, we got equal highs here. And part of my core rule is I will never be trading in a direction against equal highs or equal lows. So if we have equal lows, I'm never going to be taking a long. Vice versa, if there's equal highs, I'm never going to be taking a short away from the equal highs, right? I'm going to wait for those highs to get broken before I take my trade. Unless I'm going towards the direction of those. Then those are deemed as a valid target, as NQ likes to, search and destroy those points. And then that brings us into the DNL trading indicator. And what this does is it takes the highest volume candle throughout the day on the 5 minute, and it just marks out the high and low. And that can be used just as the first presented fair value gap as a key level to take a trade off. So yeah, I would say the most important indicator that I have on the chart right now is for sure that DNL trading indicator. This candle is important because it represents the end of day positioning. Right? This is when institutions are adjusting exposure, closing positions, or carrying risk overnight. And what this indicator does is it just draws reference levels from those candles and keeps them on the chart for the next sessions, right? They're not buy or sell signals at all. They're just structure levels. And I mainly use them as reaction zones or bias contacts, an area where liquidity needs to matter more than anywhere else, right? So price respects these levels far more often than traders realize, especially during high volume times. But again, this indicator doesn't predict price. It just helps me stay patient and disciplined. And that kind of brings me into the risk management, right? Like, none of this works without risk management. Whether you're trading your own account or prop firm, risk control is everything. I focus on a small, consistent risk per trade. No revenge trading, no oversized positions. Again, most traders don't fail because their strategy is bad. They fail because they can't manage risk or emotions. And that'll lead me into this tool here on TradingView, right? This is the long or short position. And actually what you can do inside of this, which is super awesome, right, we can go into settings and, right, we have our long position, set our account size, right? If we're trading 50K prop firm, 50K. Lot size 1, right? This doesn't necessarily matter, 1 contract. Risk, right? This is the big part. I risk $250 a trade. You should too. Or risk $125. But yeah, I put the risk at $250. And that's pretty much all you need to do here. So we'll hit OK. And now, right, if we go to place this somewhere, and let's say we wanted to take this trade, and we wanted to have our stop at the low. Okay, here's the low. And let's say we were targeting the tippy top. So this is what our trade looks like. Look, this is obviously a very fictitious trade, but what you can kind of see in here is, right, is for our 69.25 point stop, we would need to risk 0.18 of a mini on NQ. So basically what that means is we would want to take this trade to risk $250 with 2 micro contracts. And basically it's telling us that if we take this with 2 micro contracts, if we hit full take profit, our balance will now be at $51,995. Right? Why this is important, right? You can see how much you are going to make before you even take the trade. You can see how much you need to be risking, right? If you need to be in with 1 mini, if you need to be in with 5 micros, you can see all that information. And then once you have this setting down, if you were to take the inverse of this position and go short here, right, with a, let's say we want a 40-point stop, targeting the lows, right, we would take this trade with 3 micros, and that would net us 3,800. And so obviously if you change the stop, you'll see that quantity right here, this quantity change, right? We can see that at 12.5 points, okay, that's where we want to be risking our 1 contract. And vice versa, if we have 250 ticks of a stop loss, we're going to want to be somewhere in that 2 micro range. So this is just a great tool to use, and I would recommend setting it up like that. But yeah, these are the biggest main things. Also, what we're going to want to do here is we're going to want to talk about some common beginner mistakes, right? So what are the beginner mistakes when getting into futures? And the biggest thing I see, right, over the years of doing this, knowing a bunch of people who've done it, is overtrading, switching strategies, ignoring your time of day, and trading without a clear invalidation point. If you just clean those up, you are ahead of 99.9% of people, right? This is what everyone struggles with. Even I struggle with this from time to time, right? Like, it's an ongoing problem. That's the toughest thing to master, is all of this stuff at the end, right? This overtrading, this switching strategies, you know? But yeah, if you've made it this far, I appreciate you. In upcoming videos, I'll make sure to break down order flow, live trades, and how I combined the DNL indicator with real-time execution along with the order flow to go along with it. So if you want more structured resources or deeper breakdowns, check out the links below. Drop a comment if you have any questions, and if you want the next video, comment futures, and I'll know to make it. And yeah, guys, trade with structure, or else you'll get humbled. It's not my fault.